Every once in a while, a chart reaches a point where the past completely stops mattering. All the old supports break, all the previous ranges vanish, and the market enters a zone where every move is driven purely by sentiment and psychology. Right now, DOT is in that exact position after breaking levels it had protected for years. This is Shah, and let us break down what is really happening on DOT. DOT is currently trading around $2.3, and to understand the seriousness of this move, we need to zoom out first. On the weekly time frame, DOT has officially fallen below the lowest price of 2020. That alone is a major sign of weakness because breaking a historic low means the market is entering price territory that has not been tested before. More importantly, DOT has lost the $3.6 support. This level held for almost 2 years. Every time price came into this zone, it produced strong reactions upward. It acted as a base during heavy corrections, and traders trusted it as a dependable long-term support. But now that level has been broken, and when a multi-year support breaks, the chart always resets its structure in a significant way. Moving down to the daily time frame, there is essentially no real support beneath current price. The only thing below is an old October liquidation wick, which is not a stable technical level. That is why the chart is now being guided by psychological levels instead of structured support zones. The biggest psychological level below is the $2 mark. This is not a technical support from past consolidations, but psychological levels matter because traders naturally react to round numbers. And in DOT's case, that $2 level becomes critical because the downside structure is already pointing toward that zone. There is also something important happening on the daily chart. DOT has formed a double top earlier in this range. A double top usually signals bearish continuation, and its downside target often lines up with the next strong or psychological support. In this case, that target aligns perfectly with the $2 level. This gives extra confluence that price may want to test that zone before making any serious move. Above current price, the major resistance remains at $3.6. This level will not be easy to reclaim because it was such a strong support earlier. Once a powerful support breaks, it usually turns into an even stronger resistance. So if DOT ever wants to shift momentum, it will first need to retest and reclaim $3.6 with strength. So what is the scenario from here? As long as DOT stays above $2, the chart still has the chance to bounce. That psychological level is the line in the sand. If DOT dips into that zone, finds stability and buyers step in, then the price can push upward again. The first major target in that case becomes $3.6, the same level the market recently lost. However, if DOT fails to hold $2, then the chart enters deeper untested territory and the downtrend continues without any established support beneath. That would be a very weak sign and could extend the bearish cycle even further. For now, everything depends on the behavior around $2. Hold it and DOT can bounce. Lose it and the chart continues to bleed. If you are finding these breakdowns helpful, make sure you subscribe for more clear technical analysis and comment below which coin you want me to cover next.